Hi everyone and welcome to Finance with JCL. Today I'm going to discuss with you one stock I bought, Corsair Gaming, and the ticker symbol for that is CRSR, and it trades over on the American exchanges. And just before we get into it, quick reminder, this is not financial advice, so please make your own decisions and don't do anything just because I've done it. Okay, so let's get into the screening. So the screening for me was actually in the Patreon group. This was flagged as one to look into. So thank you very much for that. I did have a look into it it's a couple of months ago, I think. And what happened there was I looked at the valuation wasn't so good, so I didn't really proceed too much further. Recently, with changing price in the market, the price of this company has dropped a bit. I thought, you know what, I'm going to look into it in a lot more detail this time. And I'm sitting here thinking, I'm upgrading my gaming PC at the moment, and I've got a Corsair mouse, I've got 4 sticks of Corsair RAM in it, I've got a Corsair power supply, and I'm just buying a new one. I've been using their products for probably 10 plus years. It's actually, if I look at my list of stocks that I missed in the past, where I should have picked them up, things like Rightmove in the UK, Auto Trader, big increases over time. I was using their services as many other people that I knew. This is one actually thinking that may fall into that category. Good quality products, been using them for a while. Others are flagging it. They've got good market positions. So this is one really to have a look into. So that's the screening. So now let's have a look at the qualification, and we'll flip over to the screen sharing for that on the desktop. So we start off on morningstar.com. I'll just show you how I find my information. I'll type to the top left there, Corsair, and you can see we'll look at all the results for Corsair. And there we are, Corsair Gaming, CRSR. Click into that one. Just wait for this to load. You then click on the key ratios in the center and then the full key ratios data. It will pop up a new window, so make sure that's labeled. And this gives you your 10-year financial view. Now, these guys haven't been on the public markets that long, so there isn't 10 years of data. So my screening, first of all, looking at the information, revenue's going up, gross margin's going up as the revenue goes up. That's a good sign. And they're now profitable, going from just under zero to now 103 million. So that's a good turnaround. And they've actually not issued any new shares as they've been growing. Again, that's good because that's not diluting shareholder value. Their operating cash flow is nice, positive, minimal capex from that. So your actual free cash flow is pretty decent there. And you can see that's almost 10% of revenue. Key ratios, so the net margin, 6%, not great, but it looks like it's on the up. Return on assets is okay, and that return on equity, anything over 20% is very good, over 30% is exceptional. On financial health, that current ratio is always above 1, which is an absolute minimum. And the debt to equity has come down massively, so you can see it was 2.42. And I wouldn't invest under those circumstances, but it's now 0.73. So they've paid off a nice bit of debt. Right, Yahoo Finance. Let's type it in the top search bar and see what comes up. So Corsair Gaming, and we'll have a look at the statistics. So worth about 3 billion, you can see here in the top left. And the forward PE is 17.66, which is pretty reasonable actually. And we'll look at the number of shares here, 92 million. And there's no dividend. 8 analysts, so that's decent coverage for a relatively small company. We look here in the bottom left-hand corner. Yeah, they're expecting 17% next year and sort of 9% a year for the next 5 years. Analyst recommendations are generally buy. Now, not that that is something to base your decision on, but no one's saying sell. And if lots of people are saying sell, maybe there's something we've missed. Next part, screening. I'll go over to Simply Wall Street. So I strongly recommend this. They are a very good platform. You see the summary there. First of all, they're saying trading 50% below estimation of value. And you notice here I haven't actually looked at the price at all. I'm just looking at the fundamentals first of all. So I'm going to skip past the price graph. Now the valuation, that looks, let's give it an indication here, it could be interesting. Keep scrolling down here. Now this is the interesting bit. 8 analysts that these guys are using are saying 20.8% growth per year. the next 3 years. If we look at free cash flow, we are currently at 160. If I go ahead, we're looking at 385 going 5 years ahead, 4 years ahead. So that's over doubling in that time. I'd be happy thinking 20% a year for 5 years. The debt is coming down nicely and the equity is going up, so that's fantastic. Balance sheet, ideally they have a bit more cash, but they've got plenty of inventory and stuff that's good value inventory. And the management's cool. Now look at this guy, 27 years. He's been there since the start. So this is always a really good sign if you've got founder still there running this place. He's got 100 million stake in the business. He doesn't pay himself a crazy ass salary either. Individual insider still owed a decent chunk. And some of these venture capital firms, they might be cashing in some of their shares, which you can see they've done above, to pay back their original investments. For me, that's probably past the screening. What I will do to more advanced level is I'll go to Google, type in Corsair Investor Relations, and this page comes up. You just see here they've got some nice numbers here. They're in plenty of countries, very high PC component market share, and that market's growing. It's a very big market. And if we sort of click into detail, look at all these things that they do, which are becoming more and more pertinent in today's world. Sort of the streaming stuff, the gaming, which lots of people have started getting into over lockdown. So it's something that once you get into it, it's you tend to keep going with it for a while. If we just scroll down this, it's 117 pages. I'm not going to go through it in detail, but it's a good thing to read. Look at their market position against their rivals. So that's really interesting to see. The kind of peripherals, they're not number one in any of them, but they are in that top section. The actual components, memory, cases, power supply, cooling solutions, things that you need for all your computers, they're in an outstanding position. This is US market share, by the way, which is probably one of the most mature markets. I've actually got Corsair memory, power supply, and I've just bought a new power supply, an 850 watt power supply, and yeah, it looks like their stuff comes out very well in the tests and has a 10-year warranty as well, so they're backing the quality of their product. These key competitors, they're not kind of direct competition across all of these elements. They've got competition from Logitech on that top section, but not on this bottom section, for example. Perhaps that is a future video, Corsair against Logitech. Let me know in the comments below if you'd like to see that. If you'd like to join the Patreon group as well, where this one first came to my kind of investing attention, I'll leave a link down there below so we can discuss some ideas and what have you. Cool. So that is the key information. So if we go back to those conditions of success, we've done the screening, we've done the stock qualification. So the very important part now is the valuation. I'll show you how I'm going to do this based on discounted cash flow. Buffettsbooks.com, fantastic website. So what we need to find out is the free cash flow at the moment. That is the 160 on Morningstar. We said earlier around the growth, so I'm going to say 20% for 5 years. And I want at least a 10% return, so I want to use a 10% discount rate. So there's a total value of all the cash that is generated by the business over time, and we just need to divide that by the number of shares, which I think was about 92 from Yahoo. Let's see what it comes out as. So here, intrinsic value per share is $55 per share. Trading at 32 on the stock market. So based on that, it's trading quite a bit below the intrinsic value. Could be a 14% annual return. 32 divided by 55. You can see that the margin of safety, therefore, times up by 100, probably looking at a 42% margin of safety there, which is pretty decent for a 10% a year return. So for me, that's why I bought the company. I know the company, I've been using their products. I like the company, they're good position in the market, they're growing, good insider ownership, debt's coming down, and that valuation. So very happy with that. That's how I got to my buy decision as well, because it's better. It's better than some of the things in my portfolio. So therefore, I would buy it. There's a good margin of safety there, and there's definitely some upside in this company. So if you'd like to buy this company, I will drop a link below to my free trade account. And if you use the referral link, you could potentially get a free share, up to the value of 200. If you like that, do have a look in the link below. Alternatively, I think if you're more international based, not in the UK, there's the Interactive Brokers link where you can get some benefits from signing up with them as well. Again, if you want to buy this company and are looking for a broker that will facilitate that. Thanks for joining me. I hope to see you on the next one.